Wednesday, February 19th, 2020, MONERO 64, home of alternative economics and contrarian views. This morning, I want to talk about how coronavirus could disrupt the whole global supply system, the just-in-time inventory system, and how that could lead to shortages of goods all around the world and higher prices for the consumer. It could lead to company failures and a lot else. Before I go into the subject further, I'd like to say this video will probably be demonetized as I'm using the word coronavirus. So for those of you who think this report adds value to your knowledge of what could happen in the economy, in the world, think about supporting the channel. There are different ways to support the channel. One is through the MONERO 64 Teespring store merchandise. Here's an Andy ECB mug. It's got Christine Lagarde behind bars. Right now, we've got a 20% discount until March 15th in the Teespring store. You can use the promo code Winter 2020. The other way to help is through Patreon. You can send me private messages through Patreon. It's a little more personalized service. I do try to answer all the questions in the comment section, as many as I can. The other way to help is through PayPal, and you can also help through all kinds of cryptocurrencies, of which I have wallet addresses below in the description. So let's start with the global supply chain, and more importantly, just-in-time inventory system. Of course, I'll look at the market just after I finish looking at this morning here in London. So I want to start with just-in-time inventory because that's important to look at before we look at the global supply chain. So Investopedia says, what is just-in-time inventory system? They say it's a management strategy that aligns raw material orders from suppliers directly with production schedules. Companies employ this inventory strategy to increase efficiency and decrease waste by receiving goods only as they need them for the production process, which reduces inventory costs. This method requires producers to forecast demand accurately. The JIT, just-in-time inventory system, contrasts with the just-in-case strategies wherein producers hold sufficient inventories to have enough product to absorb maximum market demand. So yeah, that's how it used to be done in the past. Nowadays, there's very little stock or inventory. It's done just in time. I'll keep going. Key takeaways. The just-in-time inventory system is a management strategy that minimizes inventory, increases efficiency. Just-in-time manufacture is also known as the Toyota production system because the car manufacturer Toyota adopted the system in the 1970s. Kanban is a scheduling system often used in conjunction with JIT to avoid overcapacity of work in process. The success of JIT production process relies on steady production, high quality workmanship, no machine breakdowns, and reliable suppliers. So I want to look now at the advantages and disadvantages of this system. Advantages. JIT inventory systems have several advantages over traditional models. Productions are run short, which means that manufacturers can quickly move from one product to another. Furthermore, this method reduces costs by minimizing warehouse needs. Companies also spend less money on raw materials because they buy just enough resources to make the ordered products or no more. Disadvantages. The disadvantages of JIT inventory systems involve potential disruptions in the supply chain. If a raw materials supplier has a breakdown and cannot deliver the goods in a timely manner, this could conceivably stall the entire production process. A sudden, unexpected order for goods may delay the delivery of finished products to end clients. So that's the problem with the global supply chain and China. China, yes, they make a lot of things. I'm sure everyone in the world, if they look at what they've got, a lot of things are made in China. But not only that, a lot of companies, manufacturers, or in the medical sphere, a lot of the parts for products made in the UK or in the US or in the EU come from China. And it's all part of this global supply chain just-in-time inventory system that is used today. I know we've spoken many times in the past that it could be what triggers like the breakdown of the credit system. Could be the breakdown in just-in-time inventory. And I think we need to keep this in mind with what's happening in China. I don't want to speculate if it's going to be solved, the problem, how long it's going to take for them to solve it. I don't know. That's up for us to keep an eye on it. And I'm not going to say it's going to have a huge impact, but it could have an impact. And there are stories now, which I'll come to now, that are saying this is happening. So the first story I saw yesterday, that was about the global supply chain. I won't go through them entirely, just give you the headline, or else I could be here all day. Jaguar Land Rover rushes parts out of China in suitcases. Car maker moves to prevent UK shutdown as coronavirus threat grows. So this is a case where a UK manufacturer is importing parts from China. It says Jaguar Land Rover is flying components out of China in suitcases as it races to prevent its UK plants from closing by the end of this month. Sir Ralph Speth, chief executive of the UK's biggest car maker, said the company's British plants were safe for this week and the week after, but faced difficulties sourcing parts from China in the following weeks, which represented a risk for overall production. So there you go. What could that mean for Jaguar Land Rover prices? If they can't produce the cars, the new cars not going to be there. No supply of cars. If demand stays the same, the prices will go up. And this company, of course, is owned by a big Indian company. They could probably be okay financially. It's a big company in India. So let's move forward. Another story. This is from voiceofamericanews.com. China coronavirus lockdown crippling global supply chain. So it's not me, YouTube. I'm not making this up. With more than 50 million people on lockdown, economists warn China's efforts to contain the coronavirus outbreak are reverberating through the global economy. For 2 weeks, major airlines have either scaled back or outright canceled service to China. And many global retailers, including coffee chain Starbucks and furniture giant IKEA, have announced that they are temporarily closing outlets. Yum Brands, the owner of well-known fast food chains, including KFC and Pizza Hut, said that it had been forced to close nearly a third of its stores in the country. And this is the interesting part here. The impact is now growing outside China. This week, Hyundai Motor Company announced that it had been forced to suspend production of its plant in South Korea because parts made in China were no longer available. Nintendo announced that shipments of its popular Switch gaming platform would be delayed. And luxury brands including Estée Lauder, Coach, and Kate Spade have warned that the outbreak may have a significant negative effect on sales. This is just something I found. The top 10 products manufactured in China in 2018. So personal computers, the ease of accessing information is due to near ubiquity of personal computing power in first world countries. China accounts for the vast majority of those personal computers. In 2013, China-based Lenovo surpassed Hewlett-Packard in OC sales market share. Overall, China exported the highest value of computer sales at 142.2 billion, or 40.9% of all computer exports. So this is looking at what products China is involved in. 2, mobile phones. We're all mobile now, but China is on another level because they are actually making them. Since 2010, they've seen a 105% increase in phone services, which includes smartphones, according to analysis of worldstopexport.com. Solar cells. Going green isn't just liberal boondoggle in the culture wars. It's also big business. Energy equals output after all. And it says they're the largest investors in solar energy, largely because they use so much of it, and their dominance manufacturing solar cells will continue. From 2008 to 2013, their manufactured solar electric panel industry dropped world prices by 80%. Air conditioning. In 2017, the Chinese exported 14.7 billion worth of air conditioners. 33% of all air conditioners exported that year, according to worldstopexports.com. Shoes. There's a reason Nike, Adidas, and other top sneaker companies open plants in China and perform the majority of their manufacturing there. They shipped 21.6 billion worth of rubber and plastic footwear in 2017. They even exported 1 billion over second place Italy in leather shoes, a leader in the high-end bespoke market. Cement. When you build, you need cement. Almost all construction depends on it, which is what makes China so integral for any sort of structural development. So regardless of how it is delivered, China, 580 million in 2017, or 6.6% of the overall market. Energy-saving lamps. Similar to cement and China's drive toward renewable energy with solar cells, energy-efficient light is close to a primordial necessity in the modern world. That helps explain why in 2014, China accounted for over 80% of the energy-saving lamp market. Clothing. The cost of production is rising in China, but there's still a near monolith in clothing manufacturer. They rank #1 by a landslide in global textile exports, accounting for nearly 30% of the market by way of textile infomedia. So I'll stop here. You can see how important China is to worldwide goods and also to the global supply chain. To finish off the examples about the global supply chain and how China is important, I'm going to look at a website called fiercepharma.com. It says, as China battles coronavirus, should other countries worry about their drug supply? So let's have a quick look at this. Worries about pharma's reliance on China for its supply of key drug ingredients have popped up in the US from time to time before. Now the rising coronavirus has sparked the fear again. I'll skip to the important part of this article. I won't go through the whole thing. It says, there's no question that China is a major supplier of drug ingredients to the US, especially of widely used generics. For example, according to US International Trade Commission data cited in the US-China Economic Security Review Commission report, China accounted for a 70.4% share of US antibiotic imports in 2013. Today, that number may be even higher at a dominant 97%, according to Gary Cohn, previously chief economic advisor to President Trump, as quoted by Yanzhong Wang, a senior fellow for global health at nonprofit think tank, the Council on Foreign Relations. So there you go. This could be serious. And how could it affect prices? As I said, you disrupt the just-in-time inventory system. The global supply chain disrupts that. and manufacturers, importers, supply dwindles, or manufacturers in the UK or in the US can't produce things. So there's a shortage of goods. If a company is small, they won't be getting an income for selling those goods. They could have loans that they owe to the banks or finance companies. They could go under unless they're really big. They could probably be bailed out. Not only manufacturers and producers in the UK or in the US or in the EU, but also people who are wholesalers who sell things that they import from China, that could be disrupted as well. Not just because the countries might not be accepting shipments from China, but because the supply chain is disrupted in China itself. So as that article about just-in-time inventory said, that's one of the biggest disadvantages of the just-in-time inventory system, which is ubiquitous now in the world. It's when you have a disruption, and a disruption from China would be really big. So this is probably one of the reasons why we're seeing also precious metals prices rise. And now I come to look at the markets. I know precious metals have been rising since May last year, and it's mostly to do with the monetary policy, the fact that the Federal Reserve had to reverse their normalization and they're printing again, they're cutting again. But this could have a short-term impact on prices, and it could lead to higher inflation as measured even by our government officials or statisticians. So with that, let's quickly look at the markets this morning. It's 7:55 a.m. London. Yes, gold and silver have done well. Silver is outperforming, which is good. I know we've had a lot of false starts, but this could be the one where silver actually starts moving. Right now, we've got gold at 1604.80. The high's been 1606. So yesterday we got back above 1600 for the first time since early January. The key resistance here is around 1610, 1611. That was a high back then when gold spiked, when the Iranian general was assassinated by American forces. So that's the key level technically. Gold has been moving higher and the other fiat currencies have been moving lower throughout the last week or so. They're making new lows versus gold, or gold is making new highs, and I think it's only a matter of time before gold approaches that 1920 level that we saw in 2011. It won't be this week or next week. It will take a while. Markets don't go up in a straight line. Silver right now is up 12 cents, or almost 0.75% at 18.28. The high's been 18.35. Stock market, it seems like there's still complacency out there. People still believe things can be kept going. Maybe they haven't looked at this global supply chain, but who knows? Maybe the Fed can keep investors from panicking. Right now, the Dow futures is up 88, 29,319. S&P 500 is up 10. NASDAQ 100 futures up 36, or 1/3%. Foreign exchange, sterling or cable is up 0.1% at 130.10. Euro is up slightly, 0.1 as well, 108.02. Yes, I noticed the dollar index is doing well, is around 99. But one thing I would say, maybe versus other fiat currencies, the dollar is a good hedge. But in the end of the day, the dollar, not only the other fiat currencies, but the dollar itself, they're going down versus the ultimate currency, the currency that's been money for thousands of years, and that is gold. Dollar is up 0.2% against the yen at 110.11. The dollar slightly lower versus the yuan, just below 7. Crude oil up 1%, WTI at 52.80. Finish off with the bond market. 10-year yield is up 1.5 basis point at 157. Yesterday we got down to around 153. The markets recovered though, so yields backed up a little bit. Global supply chain, just-in-time inventory. Could the coronavirus outbreak be the black swan event that disrupts the whole world economy, that leads to shortages not only of goods but also of medical supplies everywhere around the world? I'm not saying that's for certain, but it's a possibility and we have to keep it in mind. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. If you haven't subscribed to the channel yet, think about subscribing. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.